Morning. Right, welcome to anyone who's out there. It's a live streaming show again. Said I'd do the live stream today regardless, so here we are, doing the live stream show again. It's actually a holiday here in South Africa. So, yeah, for those of you who are on holiday, have a fantastic day. It's really good. Not much going on in the way of trades today. It's a little bit of a strange day. We did take a short on the Nikkei yesterday up here, which was great. But if you want to get into that now, it might be a little bit late. Don't know. See how it goes. How's it, John? How's it, Carl? Good to have you on board, man. You know, today I want to talk a little bit about the, I don't want to say too much. I want to talk about these funded trader challenges and why they're taking so long to get through. How's it, Taiwan? Yay, welcome. That's great. Someone from Taiwan. Yeah. It's a great place to live, that I believe. But I just want to talk to you guys a bit about the funded trader markets today and why people are struggling to get through them. Even myself, with all my years of experience, why am I not just getting ahead with this? Why is it not, doing something? As you can see here, we're still on 24,836. We lost a couple of hundred playing around, and we haven't really traded it much and what's going on. And I've come to my own little conclusions as to why that is, and why funded trading is not as simple as people make it out to be. And my opinion is actually quite simple, guys, and that is because there's too many restrictions on it. There's too much in the way of restrictions. So, for example, a normal account with $100,000 on it, you can take 20 trades with $1,000 risk on each and every trade. And if every trade was to lose, if you had the worst day on earth, the worst week on earth, whatever, and you lost all 20 trades, you'd lose $20,000, and you'd have to get back up with your butt and try and fix that, try and restore that. But you can still get back, and you've still got $80,000 left, and everything's fine. Everything's okay. So when you're trading with your own money, you can take the risk and you can put it out there with a view to the fact that you will win half your trades. What I've found with the funded trader markets is the restriction on the daily drawdown and the restriction on the total drawdown is a bit of a problem. That's where the issue lies. What I found is with the funded traders, okay, this one is a $25,000 account, but I'll use the example of 100,000 because there's 100,000, say, for example, in this account or something like that, and you can play around with that. But now, on a $100,000 account, you would have a total drawdown allowance of $10,000. And what weighs on the mind psychologically with these funded traders, in my opinion, is at the end of the day, you can only take a couple of trades because it's constantly on your mind that if I had 10 trades in the market at $1,000 risk each, you would lose the whole $10,000 that you're allowed to lose. And the drawdown per day, I'm not sure what it is on a $100,000 account. I'm not sure of the rules. But I know, okay, so the max daily drawdown is 4%. So it's probably about 4,000. Okay, so I would say probably 4,000 on a $100,000 account. That means you're only really trading $4,000. It's like this $25,000 account. What I figured out here is I'm not trading with $25,000. In reality, I'm kind of trading on a daily basis with $1,000 because that's all I'm allowed to risk. And in total, overall, $2,500. Let me know what you guys think of that. I don't know if you guys are into funded trading or anything like that. Personally not. I've always traded with my own money all my life, and I've never had a situation where I've gotten into funded trading until now, until I started the YouTube channel, a lot of you guys mentioned that you're struggling with the systems on getting it with funded trading. So I opened the account to see what the problems were. And so far, my research has shown me that that's where the big problem lies. The big problem lies with the restrictions they put on you with regards to drawdown and that sort of thing, because you're not trading with the whole account. It makes it a lot more difficult to trade. Morning, Elaine. How's it going? Welcome back. You know, so the big thing is if you take a normal account and you trade it, I mean, you can just open as many trades as you want. And like I say, if you have a bit of personal drawdown, you understand how it's going to work. I mean, we could sit here today and take this, open 10 or 20 trades. It doesn't matter which way they're going to go. The chances of us losing all 10 or 20 trades is next to nothing. I mean, it's near impossible. But it can happen, and if that was to happen, you know, you could come back tomorrow and carry on. You would have just lost a portion of your account. But with the funded traders, you know, and also yesterday, I tried to take a trade on this JAP 225 yesterday on this funded trader account because I took the trade over here. So I thought I'll take the trade here on the funded trader account for us and see how it, you know, pitches out as well. And it wouldn't allow me. It was closed. There was no trade available. I couldn't take a trade on it. Whereas on every other account, I could take a trade on the Nikkei, JAP 225, no problem. But not on this. I couldn't take the trade yesterday. So that was kind of a problem. And now today it's sort of turned around a bit. I might still go short on it on this account. Yeah, so I don't know. You guys tell me what you think of these funded trader accounts, but that's my research so far. The biggest problem that I'm having with these funded trader challenges and these funded trader accounts is you're not trading with the full amount. You're trading with 1% of the account, and even less than that effectively, because that's your total allowance of loss. You know, so for example, on this $25,000 account, you're allowed to lose $2,500. That's 1% in total forever. Otherwise, they close the account. And on a daily basis, just $1,000, which means I'm trading with $1,000. And that's the difficulty of picking this account up. And you can't open 5 positions, because if you open 5 positions, it'll be constantly on your mind as to, I wonder if that account is still open. Yes, this really doesn't matter to me. I could care less whether this stays open or not. But well, I could actually, because I wanted to keep it open for you guys so we could do the research and see what's going on. And my research so far, that's what it's brought me out to. It's brought me out to, when you're trading with your own money, you can trade as much as you want. You can go crazy. You can actually, you know, make a profit, make a loss, doesn't matter. There's no stress. There's much less stress actually trading. Well, not stress, but much less worry about the account, let's say. Because I can control my own money, I can control my own account, and at least if I've got $100,000 in the account, I can trade the whole amount. I can trade every cent of it if I want to. And the policy of it is, the way I like to trade is, if I've got 20 trades open with $1,000 risk on each individual trade, then I'm risking $20,000, which I'm not allowed to do on a funded account, by the way. And then if one trade loses, I lose $1,000. That's fine. And if one trade wins, I win $2,000. That's fine. My view is, as you know, with the psychology behind it, is I'll win half the trades and maybe lose half the trades, and with that I should be profitable. And if, like I said, if I really have a terrible week, a terrible day, I lose all 20 trades, then I lose the 20,000. My account's still there. I've still got $80,000. So yeah. Your trade isn't updating, the price remains the same. Which trade on which platform is that? Maybe you've got something wrong on the platform there, or I don't know. Depends on the trade as well, and is it an instrument that's open or closed today? Like I said yesterday, I had a problem with this. I wanted to trade this Nikkei. I wanted to take a short trade on it yesterday here on the funded trader account, and it wouldn't let me. just said no. Computer says no, no trade. And the thing was standing still the whole day. So I don't know if it was a liquidity issue on their side or if the market was just somehow closed, or I don't know, because it was open everywhere else. I was able to take a trade here. There was no issue, no problem, and it was trading all day. So makes no sense to me, man. Okay, so FTSE, you'll notice I said this morning that I'm thinking of this going short on this, but not yet. Wait for it to get to the resistance, and we can take a short on that and see where that goes. I don't think we're going to get a lot of people watching today because it is a holiday here in South Africa, so a lot of people will be probably sleeping in, I suppose, enjoying their day. And this isn't the US session, it is the Euro session. You know, if you want me to trade on lower time frames for you guys, we can do that, but that just defeats the object of what we're learning here. So let's not go there. Let's just have a back and forward. BTC. BTC. Yeah, let's just see. Is it moving or what's going on? If I put it on a, let's put it on a 5-minute chart. Yeah, it's not doing anything, eh? That's interesting. Okay, very interesting, because this is like a 24-hour product that moves all the time. Gee, I hope Bitcoin hasn't crashed. Okay, let's just have a quick look here. So yeah, you're right. It's definitely not doing anything, is it? It's standing dead still. Shall we have a look at this one? I think I got BTC listed here as well. Ooh, that's moving. That's definitely moving, isn't it? Look at that. There's price movement there on this account. And it's at 63,503,504. And on this one, it's just sitting on 509, stuck. Yeah, there might be something wrong on their side, or has this changed? Okay, so I'll tell you what we can do. Let's delete that one, BTC. Let's add it again. It might just be the broker. Bitcoin. Shall we just spot crypto? What's this one like? That one's also not doing anything, is it? I'm just checking if it's the broker or if it's trading view that's giving the problem here. BTC, let's just try it again. Let's try a different one. A different BTC on its own. It's a different thing, this, yeah. Yeah, none of the BTCs are really moving here. So I wonder what's going on there. Okay. Probably something wrong on their side. More than anything else. I can't see any other reason why it would be standing still. The price is moving, but not your trade. Huh. That's also strange. That's also strange. But there does seem to be something wrong with Bitcoin on TradingView. Oh, there's a movement. Look at that. Maybe it's the internet or something. I don't know. Look, that was a big jump, eh? That just like started moving there. They are okay. So the price is moving. So it's probably something to do with your trade. Let me just have a look. If you look at this Nikkei trade here, that's moving. That's definitely moving. So just check with them. They've got a support, eh? Just check with them what's going on with your trade. Maybe something else, because this one's definitely working. Could be your broker as well. Just check with your broker. Make sure your broker's in the background, because it all links to your broker at the end of the day. That's where the big issue lies. Yeah. So yeah, back to the funded trader thing. Yeah. So yeah, these guys are okay. I mean, I got no problem with funded trader markets. I'm quite happy with them, and they haven't given me any hassle. And you know, the nice thing is I'm allowed to trade as much as I want every day and whatnot. But I do know the rule based on the drawdown and the fact that you're not trading with all your money. So that's what I find with funded traders. Funded traders are struggling, because even myself, I'm struggling to move this account because I can't trade what I want to on it, because I can't trade the amounts that I want to on it, and I can't put the amount of trades that I want to on it. And it tends to make me leave it alone and not bother with it as well. So that in itself is a problem. And now maybe I should take a short on the Nikkei pretty soon on the funded trader market account for us. Anyway, but let's just wait and see what happens with that candle. And it might not play out while we're still sitting here having a wee chat. Trading view can be iffy sometimes, I've noticed on the demo account. Yeah, I'm not... most of my trading is done on MetaTrader 5, and I've never had a problem there. So, and other times it was with the actual broker's own charting programs and things like that. So trading view, I really just use it for this and just to show you guys how to trade and stuff. So as far as the iffy goes, I can't comment. A lot of guys love this program, but it's nice. I like it. I think it's an absolutely marvelous little charting program from my side. Love it to bits. But by the same token, in South Africa, most of the brokers don't deal with it. So, you know, if I want to deal with it, I've got to say deal with interactive brokers or whatever overseas, and it becomes all complicated as well. So, yeah, but okay, that's great. That's no problem, and it's a good time to be moving my money out of South Africa anyway, because the rand value's got stronger. There's the US dollars that are. Look at that. Good time to move the money out, and I'll move it back when it's up there. That's a good thing for the ZAR. Euro US dollar, yesterday we took the short trade, worked out nicely. I swung it around, went long, and I actually got out before closing because I wasn't sure what's going to happen today, but I see it's still going long, and I'm still quite bullish on the Euro US dollar. I think it's going to go back up to the top here, hit resistance again. It's in structure, so it might go all the way up to the main structure and start coming back down again. Morning, Rama. How's it? Welcome. Yeah. Yeah, I normally start the live a little bit later, but I noticed the Euro sessions seem to be, maybe the time zones changed and everybody's opening a bit earlier, so I thought I'll just open up a bit earlier today and get going. So Rama, I was just discussing the pitfalls of the funded trader markets today, because, you know, we're not getting this anywhere with this account, and I've realized the reason is we're not trading with a full amount of money. That's the problem that we're getting. We're not trading with all the coins. Oh, yeah, you know what, Rama? I live in Cape Town, right? I live in Cape Town, and here's the thing. In Cape Town, it's like yesterday it was 29 degrees. The day before it was 27 degrees. Nice summer's day, beautiful weather and all the rest of it. And then last week or a couple of days ago, it was literally snowing in Harrismith, which is kind of in the middle of our country. It's between Pretoria and Durban, up in just, I'm not sure if it's actually in the Free State or still in, no, that's out of Gauteng. It's in the Free State. And it's probably about 1,200 k's away from me. But yeah, it was snowing there, and I've got the most amazing weather. But it's kind of funny because Cape Town, we're in a sort of slightly different weather pattern, a slightly different hemisphere to the rest of the country. In fact, we go through the time shifts where in summer our sun goes down at 9 o'clock in the evening, or between 8 and 9, and in winter it goes down at 6 in the evening. Whereas in the rest of the country, their times stay pretty much 6 to 6, no matter what. In summer, the worst case, the latest the sun goes down is probably 7. So, and that's all year round. So it's almost like we're in a different zone. But yeah, the weather in Cape Town at the moment is marvelous. We're having a good time. It's a bit of a rainy day here today, but yeah, um, yeah. You say the Dixie's dying. I wonder if I've got it on this funded trader markets. Yeah, I don't know if I've put it on my favorites. Let's see if they even offer it on these funded trader markets. No, obviously not. You see, that's the problem with these funded trader markets. Like I said to you, firstly, you're trading with $1,000, not $25,000 on a day. So you can't put 1,000,000 trades in. And sometimes the products are just not there to trade with, for example. And as I said yesterday on this Japan, I couldn't even trade it. It was off for some whatever reason. So yeah, I don't know, guys. I never was a fan of funded trading, but I mean, if you are in need of funded trading, then you have to use them. And I'm very happy with these guys. Like I say, I think they're actually fantastic. This funded trading market's not giving me any hassle. But like I say, as far as making money goes, it's going to be difficult for you because I can see here, like now, I've got no positions open because I haven't bothered with it because now I've got a chart open, I'm sitting, I'm trading, and it's trade in, trade out, and now to have to open another platform all the time and look for a trade, and then you can't really sit on this platform and trade in and out. You can have one trade open or maybe two, and then you're worried about if it's going to get. You're trading literally with not 25,000. You're trading with $1,000 because that's all you've got to lose, and it makes it difficult. It does. It really makes it difficult psychologically to trade those things. It doesn't worry me monetarily. I mean, I'm not worried about any money on it because it's a challenge at the end of the day in the first place. But it's just difficult to trade it. It just feels complicated. Not complicated, but it's almost like there's a barrier stopping you from getting in there and just placing trades where like I say on this type of thing, you know, normal trading, you can just trade as much as you want. You can put $20,000 risk in on a $100,000 account, and it really doesn't matter. And if you win, that's great. So yeah, no, I'm not a fan at the moment. I'm still trying to get around my head around the funded trader thing and why people love it so much. But I suppose it's to get funded, to get money. You know, they say don't trade with your own money, but I can tell you guys now, it's much easier trading with your own money because you know your risk and you know how much risk you can take, and you can design your own little pattern of drawdown and how much you're prepared to lose. So yeah, no, it is just like Australia. Yeah, one side is one weather pattern and the other side's, and in the middle is steaming hot. Yeah, I know. But yeah, Australia is a lot like us in many ways, to be honest. In the old days, you know, we even, I think, had the same sort of temperament at one time. Changed a lot these days. Um, you see, that's another problem. I see you say here, I don't like funded trading. Two companies stole my funds. No, I only trade with my own money. And I agree with you on that. You know, before I took this on, in general, I decided that, hey, there's a good chance I'm going to lose the money. There's a good chance I'm not going to get the money. But I got to do this just to see why the guys are complaining and struggling to get ahead with these funded trader, different funded accounts and things like that. I mean, I watched one yesterday where the guy's account was literally closed for, I think, almost no reason at all. You know, what did he say? It was some ridiculous reason. He had two funded accounts on the same company, right? One was a challenge and one he had passed the challenge. And he traded, let's say, the Euro US dollar on both accounts. So he traded the Euro US dollar on his account that was already approved and working in his funded account. And then he traded exactly the same trade in his challenge account on the same company. Then they told him, that he's doing copy trading or something, that he's not allowed to have the same trades, and their decision is final. Now, he had a very profitable account, and they closed his account. I can't remember the name of the company. Was it FTMO or one of those ones? Or yeah. So yeah, no, that is another problem. The guys they'll close your account at the slightest excuse, it seems. So this guy literally did his own trade on two different products on the same company, like let's say it was that FTM whatever, and he had it on his real account and he had it on a challenge account because he was trying to open another account there. So now he's decided he can only have one account open with that company, because if he has two, they'll tell him now you're not allowed to have two trades that are the same. And that he said another problem with that is now you can't even hedge. For example, if you've got a hedging account, you can't have a euro US dollar and another euro US dollar trade on the same account. That's because they're going to shut your account down. And he was actually doing quite well with that account. They shut him down. And then they say, we're only going to give you half your money. So yeah, I'm in two minds with these things, because they've been very popular over the last couple of years, but there's been so many stories like you mentioned there of the guys not paying out, of the guys disappearing, of the guys being under investigation, of the stories that have come out have actually been quite scary. So you just don't know what you're getting, and it's so difficult. There are some guys out there who claim to be very up and about and the best and above board and all the rest of it, but when it comes down to payment, then it becomes an issue. Also, Joe, have you tried ICT's concepts, and what are your thoughts on that? Oh, you got to go back and watch all my videos. Then you'll know my thoughts on it. Okay, so a lot of you would have heard me say, before you can take a trade, wait for the stars to line up on the left, wait for the moon to turn into green cheese, and then you can take a trade, and blah, 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 blah. All these overcomplicated systems. And ICT is one of them. It's ridiculous, guys. It's ridiculous. Yeah, they probably work. As I've said 100 times, every system on the planet that's out there, I mean, if you just open up indicators here and you look at how many indicators are available to you, look at how many indicators are available to you here, okay? Not 3 or 4, 3 or 4 million. So all of them are a system, all of them have got systems attached to them, and all of them work. ICT is a system strategy, and it's got its ups and it's got its downs. But what you will hear me say a lot is that trading is a 50-50 game. When you take a trade, 50% of the time when you take a trade, you've got a chance of winning. And 50% of the time when you take a trade, you've got a chance of losing. And that doesn't matter which system you work with. And in fact, you'll take two guys with exactly the same system, two people, and give them exactly the same system and give them a page of rules. So here's the rules, trade to these rules. Do you know what? One will win, one will lose, because it's not about the system. It's about your psychology and how you approach the system at the end of the day. How you work your profits and how you work your losses. So it's all about making a standard loss across the board. Say, I'm prepared to pay $1,000 for every single trade, no matter what. I will not lose more than $1,000 on any one trade, but I will make more, $2,000 or more on every trade if I can. Unless, of course, things change. It doesn't mean you have to be rigid. I mean, you make $500 and there's no way around that, then you make $500. But you get the point. Point is, ICT is just another one of these overcomplicated systems that someone has decided will make you rich, and it won't. Okay, because I've seen all the systems in the market. I've been doing this for 30 years. And believe me, there's always a new one that comes out. There's always some other strategy that comes out. ICT is very much based on the Wyckoff system. I don't know if you've ever heard of the Wyckoff system, but it's what we used 20 years ago. And this is very much based on the Wyckoff system as well, just basic support and resistance. So what I've done is I've said, you can throw a dart at the charts and you got the same chance of winning as if you have a fantastic system. All the system does is it gives you the ability and the edge in the market to make a calculated risk trade. So you can look at the market and say, I believe because of this pattern that I've seen a million times, that the world is going to go long. So I'm going to take a long trade based on that calculation, that psychological calculation. And then because of that, I'm able to place a stop loss here, managing my risk, understanding how much my risk will be, and then believing that I'm probably going to make a profit somewhere at a much higher level. And I can move my stop loss up and I can add to the trade and I can make profit. Keeping it simple. ICT has got a lot of complications in it, and you're looking for fair value gaps and you're looking for opening times, and if you overcomplicate things in the market, you can spend hours doing your research and complicating it and going mad and looking for trades, and you'll have the same result as someone who's, well, actually, you might have a worse result than someone who's keeping it basic. So really, try and keep your rules to a minimum. Try and keep your complicated things to a minimum. Try and keep your indicators to a minimum. Try and keep it clean, and you'll find it'll be a lot easier. And then don't think about it as the system's going to make me money. Think about how you are going to make the money out of the market. How are you going to become profitable from any one given trade? How am I going to make money from this? And then the easy way to explain it to you is, if I take 20 trades here now, if I take 20 trades here now at $1,000 risk each, so now we're risking $20,000 on this account, but over 20 different trades, so $1,000 per trade. So my thinking would be, I'll probably lose 10 and I'll probably win 10. But what we're going to do is we're only going to lose $1,000 on the 10 that we lose, and we're going to try and make $2,000 and more on the 10 that we win. And that will give us a profit at the end of the day. And that's how you approach trading. For you to lose all 20 trades, you're having a really bad day, a really bad week. And for you to win all 20 trades is almost like the hand of God touching you or something. I don't know. Bit of luck there. It just, that's why I say these funded traders are struggling. And that's why I took this account on, and even I'm not really getting ahead with it, because at the end of the day, I can only trade with $1,000 on this, otherwise you lose it. So total, yeah, I'm beginning to think it's a waste of time, but we'll play with it and see if we find anything else that could be of any use to us. Okay, so yeah, I'll explain my system to you. If everybody here doesn't mind, they've all heard it, I think, a million times, but I'm going to explain it again quickly so that we can all understand it and we can all go with this quite straightforward. So there's 3 ways that I trade in the market. 3 ways. You trade with a trend, okay? You trade in a range. A range, as you all know, it's sitting between support and resistance, and it's not going up and it's not going down. It's staying in that range, right? Market structure is a trend, so it's going up in structure. So that's a trend. And then the 3rd way is to trade on extreme overbought. In other words, it's at the top and you want to go short, and it breaks structure coming down, and then you take the short. Or it's at the bottom, it breaks structure going up, you're trading against the trend, but it's broken the structure and you're trading back on to the upside. So A structure break is when it, for example, there was the structure going up, it came down, it broke that structure over there, and it's now bearish at that point. So you're looking for a break of structure. So there's 3 ways to trade the market. Simple, not complicated, not out of the moon or waiting for stars to align on the left and the right. It's just those 3 basic things. Then you're basically going to look for your support and resistance. Now, how do I get the support and resistance on any one given chart? Easy. We go to the day or the higher time frame, depending on what time frame you want to trade on. Just keep in mind, the lower the time frame you trade on, if you go down to 5 minutes, the more chance you've got of losing. That's how it goes, okay? Nobody is successful on fast trading. 99% of traders lose on 5-minute trading, just by the way. Whereas on 4-hour trading and 1-hour trading, you're looking at about 70 to 80%. So now what we do is we've gone down to the day chart here. So now you've got a slightly different picture on the day chart to what you had on the 4-hour chart. And we take it to a line chart. Now, why do I take it to a line chart? Because I like to take my levels off of closing prices, not highs and lows. Candles show you highs and lows of the day with their wicks, whereas line charts give you the closing prices on any given day. So then you can draw your resistance off. There's your closing price on that area, and there's a closing price. So you've got an area. Just remember, it's just a line. You've got to look at charts as human beings. There's human beings in the market. 50% of the market is made up of sellers and the other half is made up of buyers. There's real human beings in there trading with real money. Even if you think it's a bot, that bot is controlled by a human being who's got money behind that bot, who's invented that bot. So behind the charts, see them as real human beings. All the charts are telling you is what people are doing. It's almost like the news. It's giving you information. It's giving you information as to where people are going with their trades, where the liquidity is, where the money is. So that's what you're looking for at the end of the day. So now you draw your support and resistance based on your closing prices, and you give yourself some space. You see that there's enough room in there. If it comes into that area, don't make things exact. This is trading. You're looking for an area where things are happening. Okay. So now you're in that area and you can take your trades. Now all you do is you move it back to candles, because the reason I use the candles is so that I can see the greens, you know, which way it's going. And then I can also see the tails, because the tails tell you a story, which we'll talk about now. But then I'll go back to my 4-hour chart if I'm trading on the 4 hours. Because I like to trade on the 4 hours. Everybody knows that, so that I can get some time off and I can do my own thing. Now what you do before you take a trade, if you decide you want to take a long trade on the euro US dollar right now, you wait for that green candle to close, which tells you it's come off. You see, we're trading on a trend resistance there. This is a main resistance, okay? Let me go back a step. You've got your daily support and you've got your daily resistance. On the lower time frame, you can add in your trends. You can add in your supply and demand areas if you want to overcomplicate it. You can add in your fair value gaps if you want to. But by the same token, if you've now drawn in a resistance trend line and you want to trade off this trend, you look for a closed green candle before you go long. Once the candle closes, then you can just take the long trade and go up to your next level. But the basis of my trading is not the system. The basis of my trading is I want to take this trade. Where do I put my stop loss? And how I take the trade with that is simple. I decide my stop loss is $1,000. That's the first thing I know. That's my business plan. My business plan is I will not lose more than $1,000 on any one trade. And I will try and make $2,000 or more on every trade. So my simple business plan is, okay, I want to lose not more than $1,000. and I want my stop loss to be at 1.0807, then I know my trade's invalid. It's no longer valid, that trade. It's probably going to come all the way down here. So I'll put my stop loss down there at the 108.07, and then I will calculate how much my stop loss, how much of a trade I can take. So for example, we want to, let's say we want to go, how many units are we going to buy? So we're going to buy those units. And what did we say our stop loss would be? 108. 108.07, I think it was. So now it's telling you that at that amount of units, the risk is 563. So you're prepared to lose 1,000. So you might as well go 8, 1, 2, 1, 2. There you go. There's your risk. There's the amount of units you want to buy. Risk is $1,000. There you go. You can put your take profit in if you want, and your take profit will, and if just in case you want to see if you're going to make enough money based on your profit. Let's say your take profit is 1.12. How's your risk to reward? The risk to reward on this trade is not so good because you're only going to make $1,000 on it. So it's not good enough. It's not a good trade. You want to try and make at least $2,000 on a trade. So a good trade is if this was from the bottom here and you were looking for it to get to the top. You can take the trade on a 50-50. There's nothing wrong with it because you can always add to the trade. But all I say is, if you're risking $1,000, you want to be making more than $1,000 at the end of the day. But that's how you can work out your trade, and that's how simple it is to actually take a trade. And while I was doing that, that actually shot up quite a bit. But anyway, I didn't take that trade. I was long yesterday. I was short yesterday, and then long, and then I got out the trade for the night. Yeah. Okay. I see. Yeah. Back to funded trading. Of course, you can only use part of your drawdown. That's what makes it more. Nevertheless, you can learn to optimize the process. And yes, that's actually what I'm trying to do for you guys, is learn how to optimize the process, because that's why I took the thing on in the first place, so that I could understand what your plights were with funded trading and how to do it. Because at the end of the day, I had never traded on a funded account ever. And, guys were saying things to me like the stop loss and this and that and the other, and the way I trade, like I just showed you how we trade, and it would be difficult to make money that way. So I said, no, as far as I'm concerned, how can it be different on a funded account to a normal account as to the way I trade? But now I've figured it out that it is actually quite difficult to do it, because you're only allowed to trade with a basic amount of money. So while I haven't really, I've lost $100 and something on this account, it's not a big deal. But, I just haven't been able to take the trades on it. And that's where I've just got to figure that out and see if there's a way that we can make this work so that funded trading can be a lot easier. Because, like on a normal account, we can take all these trades we want to. We can sit here right now and take 10 trades with $1,000 risk on each one, and it's no worry. The worst case is you're going to lose $10,000 on a really bad day. So you try and do that with a funded account, and they're going to close your account. So that's why I say it's, RSI divergence on swing or day trading. I've actually made a video about that somewhere back in the day. And yes, you can use RSI divergence. But let me point out to you right away that while I said trading's a 50-50 game, and no matter what system you use, you've got a 50% chance of a win or a loss. The RSI divergence, I found when I tested it out and tried it a few times or had a look at it, it tended to fail more often than it won. Let's put it that way. It wasn't great. It really wasn't great. I didn't, and trust me, I know how to play divergence and in its levels and all the rest of it. And I didn't see much success with divergence. The other problem that I found with divergence on the RSI is there's not enough trades. It's not often enough that there's enough trades available on the divergence. So if you're trading with divergence, you're just going to confuse yourself. You know what? If you want to, it's fine, but don't let it confuse your trading. As far as I'm concerned, leave it out. Let's put it that way. You know, yeah, I am very much one of those people that on a Friday afternoon, I'll go down the pub. I'm not big on trading on a Friday. You're totally right. It's psychologically a problem, all right? If there's a trade on a Friday, my click on the mouse, my finger, like it doesn't want to click. It's Friday. It doesn't want to take the trade because it knows better than me that if I take that trade, I'm going to have to like watch it till the end of the day, and I'm going to have to either hold it over the weekend or I'm going to have to get out of it. And believe me, guys, that psychological thing on your finger on a Friday, it's true. You're right. I don't like to take trades on a Friday. Yeah. You're totally right. No, you got it. You got that one nailed down to a T. Rob taking a trade on a Friday. It's terrible. And I actually prefer to just go out, just go and have lunch, and I prefer not to have any trades going on a Friday if I can help it. But that said, okay, the indexes are a no-no. Okay, definitely a no-no on a Friday or for the weekend. Indexes, I like to be out of the indexes because, if there's one thing that can go wrong over a weekend, it's an index. But the currencies I tend to sometimes take a little bit of a chance on. And it's still a gamble, but yeah, I'll take a chance on the currencies. Because for those of you that don't know, your automated stop loss is not going to help you if the world crumbles over the weekend. You come up on Monday and it opens where it opens. So that's the problem with the weekend. How much do you risk on your funded account per trade? 1%, because that's their thing, and 1%, yeah. So like on this account, it's a $25,000 account. I risk $250 per trade. So yeah, while you can take a couple of trades, it weighs on you that the trades are, they struggle to make money. Let's put it that way. They struggle to get ahead. So I'm working on it. We'll figure it out. Solid strategy, nothing worse than looking at the charts and feeling lost. No, totally. That's where my big thing is that I take a trade and often I'll walk away. But you know what? We've all got mobile phones and we've all got cell phones, and they've all got the apps on them. There's your charting package on them. And when you're a trader, you find yourself opening the phone even when you're in the shops or at a restaurant. You're like checking what's the price. You've got to try and put it aside and leave it, and it can be difficult. I know. Okay, the thing is, your maximum drawdown is 5 to 6% over the total account. I hear what you're saying there. But your daily drawdown is not. Your daily drawdown is effectively, they say 4%, but it's not, because on this account, they tell me it's $1,000. Yeah. So, yeah, I suppose that is 4%. Yeah. Bloody well it is, yeah. But yeah, that's not very good, because you basically, effectively, that means on a daily basis, you can lose $1,000. On the overall basis, you can lose $2,500, but on the daily basis, you can only lose $1,000. So that means you can only take a couple of trades based on the fact that you don't want it to go into drawdown too quickly or too fast, or whatever the case. And when you're trying to keep the account open, I don't know, we'll see. It can work, but yeah. Well done, Coral. Good show. Euro JPY. Coral, yes, you can claim losing trades from your yearly tax, obviously, because what actually happens at the end of the year, you get a statement or a tax, what do they call it again? Yeah, I'm getting old. You get a tax goodie from the trading company that your brokers that you deal with. It's a bit like your IRP5 when you're working what's it, an IT3 or something. Yeah. Anyway, you get that. Well, in South Africa, that's what it's called. You get that, and they give you your profit and loss for the year. So obviously, you only pay tax on your profit. You know that goes without saying. So if you invested 100,000, and at the end of the year you've made 50,000 on that 100,000, you're going to pay tax on the 50,000. It's an annual thing. You're going to get a tax thing. I never risk. You see, this is the problem. This is where you're going to lose, and this is something that I explained. Do you have something like an A+ setups where you'd risk more than you usually do, or do you stick to your rules all the way through? I'm the first one to break rules, because rules, if you apply rules rigidly and you apply systems rigidly, you lose money. So you've got to work around it. You've got to use your experience, and you've sometimes just got to use that gut feel, because we've all got a bit of that gut feel. It looks like my Nikkei is doing badly now. I was $300 up earlier. Anyway, you've got to use that gut feel within your systems. Don't stick to them rigidly. But A+ setup, what you've got to be careful of. Let's say that I'm trading all these products, and and I'm pretty good at trading all these products, and I'm really happy with trading all these products, and on every single one I risk $1,000, and then I get to the US 500 and I say to myself, you know what, I always win on the US 500, so that's my favorite product, so I'm going to risk $2,000 on the US 500. What do you think's going to happen to me when I do that? What's going to happen? I'm going to take a loss, and it's going to be a big loss. But because I always win on the US 500, what am I going to do when it starts losing? I'm probably going to try and move my stop loss up and make it worse. I'm probably going to try and average it down and make it worse. And you're going to end up losing $10,000 on that particular setup. So no, on that particular issue, I stick rigidly to my rule. And my rule is, like, for example, on this funded account, that's a perfect one where you said what should risk $250 per trade. My rule is don't lose more than $250 per trade. That's it. End of story. On the other accounts, don't lose more than $1,000 per trade. That's it. End of story. And I won't change that rule. I'll try and make more. Obviously, I'll try and make as much as I possibly can of every single trade. But loss-wise, I will cap the loss at $1,000 on a trade, or on the funded trader. Let's use this as an example. I will cap the loss at $250 on every single trade, every single one, without fail. I will cap the loss at $250. 25 pips on the JPY. Were you long? That's quite good. Okay, cool. Right, so back to that. What did I put it on? Gold. See, like gold is at the moment, this month, it's flavor of the day, one of my favorite trades. So now what you're saying is, like, if you have an A+ setup, would I risk more on gold? No, I wouldn't, just because I think it's going to go well. Because the minute you start thinking that one's going to do better than the others, that's where your downfall comes in, because it changes over time. For example, gold was not my favorite for a long time. Now, over the last couple of months, suddenly it's become something worth trading. It changes, it moves around, and that's as simple as it gets. So no, every product is treated with the same equal attack, let's say. Okay. Backtesting session replay mode. Yeah, I've tried the replay modes. We could do that, but one of the big things I find with replay modes is even here, for example, you kind of know where it's going because you've seen the chart. So no matter how far back you take it, you kind of know that the product is staying in that range, and psychologically your brain tends to work along those lines. Yeah, I'll look at it. We'll see. we'll play around with that. But yeah, you kind of take trades because you'll be surprised how good your memory is on a product. You'll know exactly where it is and where it's going. You also know where its end price is always. So I get it. A lot of guys do it, and we'll look at it. You know, when do I take my profit? Anything above 2%? Well, that's the big issue with anything. For example, let's take a trade like this, right? So you've taken a trade and you want to take a profit down here. But what if it doesn't reach that? Because that's your plan. It doesn't mean that your plan's going to work out. The best laid plans of mice and men, you know, they don't always work out. Your plans don't always work out. Things turn against you, things change, whatever the case. So the way I work my plan is I've got this great plan to make this $2,000 and only lose $773 if it goes wrong. But if this gets down to this level down here, okay, then my risk or my profit is the same length as my old risk. Then I'll move my risk down to my cost, and then this trade is no longer costing me anything, and then I'll wait until it carries on a bit further down, and then I'll move the stop loss down a bit further. I might add to the trade, that sort of thing. But if I see that the trade is invalidating, and that's the point, it's not if it's going sideways, it's going back, or it's just not working out. It's if the trade is no longer valid. If I look at a trade and I say to myself, you know, I'm short on this trade, but if I was to look at this trade for the first time ever, I'd probably go long. Then I'd say to myself, well, you know what? I'm trading against myself here. I need to get out of this trade because it's actually a long trade and I'm short. So I'm on the wrong side of this trade. And that's just when I look at a trade and say, the trade has become invalid. It's no longer valid. Then I'll get out early. Otherwise, I'll try and let it run all the way to the profit level and try and make the profit by moving my stop loss down where I can and following it down. You see, this is another problem. What would your win rate be? Okay. And that's the issue. For example, I'll tell you guys now that I have a 70% win rate. Okay. In general, 70% win rate. But there's a problem with that. And the problem is there are a lot of oaks out there that can tell you I got a 90% win rate, I got a 50% win rate, I got a 40% win rate. Let me tell you guys something. 70% win rate is like phenomenal, and I'm not scratching my head. It's phenomenal. Okay. But the problem with the win rate is it doesn't determine your profitability. What it determines is you have a win rate. In other words, you have a good edge, and the edge is working for you. So it means you're winning 7 trades out of 10. It means that your win rate is better than your loss rate. But it doesn't mean that your profit is better than your loss. So if you take one bad loss in amongst those trades, you could actually be sitting with a losing amount rather than a winning amount, even though you're winning 7 trades out of 10. And that's why I say to you, you've got to keep the loss set as much as possible. So less than $1,000 on this particular situation, less than on this account. Let's say we got trades open, less than $250 every single time, and then try and make $500 because your win rate is meaningless. It's your profitability that's important. So you've got to become profitable. How profitable can you be? that you look at over an annual basis. You know, you don't want to be seeing yourself going down immediately. Obviously, you've got to keep an eye on that. But you know, you'll have good months, you'll have bad months. It's the same as you have good days and you have bad days. You have good weeks, you have bad weeks. But overall, the picture overall on profitability is at the end of the year, you want to see that you've made like 20% on your money, 25% on your money, but your money's gone up, not down. So you've got to look at it from a profitability perspective, not a win rate. Win rates are irrelevant. I know guys that have got a 20, 30% win rate that are more profitable than I am. Just it's the way they trade. And they just have a different mindset. And maybe they got less fear than me. So yeah, just on that point, yeah, that be careful of that. I have moved my stop loss to break even when the trade goes the other way. Yeah, you see, what you got to look out for is, and that's where win rate comes in as well. You see, because you move your stop loss, and then let's say you move your stop loss and you take a profit. Your win rate shows it as a win. Let's say we got stopped out here now and you make $100 US. That will show this trade as a winning trade. So that goes into my win rate as a win. But it's not actually a win. It's actually kind of like a break even, or kind of like a sort of, not even a loss, but it's just not a real win. And that's why win rate, I don't play a lot into people who've got win rates. I play a lot into, can you be profitable? Can you make money? And that's the big issue. Now, the thing with your stop loss getting taken out like that is not to stress about it. What you got to look at is you had, like in this case, a $773 loss planned. So this trade, you've paid $773 for it, right? Walk away. But if you can get this up to zero, you've effectively gained $773 because you haven't lost it. And now you've got a free trade. You're trading for free. If it takes you out and goes the other way, just, I don't know how to psychologically put it to you, but just sort of close your eyes, think, well, I didn't lose anything brilliant. Move on to the next trade. Because what you're doing in this game is you're waiting for that trade that's going to make you a lot of money. And you know, those are the trades that make your day, make your week, make your month, make you happy. When they run like that and they make you so much profit and you're like, wow, can you believe it? Can you believe I made so much profit? Those are the trades that you're actually waiting for. You're waiting for that big break. You're waiting for that moment when it takes off and it goes absolutely crazy, goes nuts. That's what you're looking for. So yeah, stop loss will take you out often when you move your stop loss like that. And it takes your trade out. If you want to, you can leave the stop loss there and take the loss and wait for it. But the reason I do that is because it's the psychological thing of, I would have taken the profit. Now I don't want to lose that and the loss. So I'll just move the stop loss into an area like that and I'll just have a free trade. Let's put it that way. But like I say, guys, don't play into the business of moving stop losses around back and forward and what have you. It's at that loss. When it goes into profit, move it up into the profit. If it takes it out, you got a free trade. Look at it that way. Look for the next big trade. You're looking for the trade that's going to work, and they don't always work. Imagine if you'd taken this trade short. Imagine if you'd taken that trade short. That's the trade that you're waiting for. That trade there is the one that you were waiting for. That you probably didn't get, but if you did get it, imagine that. Imagine that one all the way down to there. That would have been a great trade. That's the one you're waiting for. Not these choppy little where it's not working out and it takes out your stop loss and things like that. You're waiting for that one that hits, you take the trade and it runs. And you can see it never came back to take out your stop loss here. Your stop loss would have been up there. You would have taken the trade. It wouldn't have reached your stop loss all the way down to the bottom. If it's taking out your stop loss too often, your stop loss is too close. I'll only move this stop loss down to cost. when it's about $800 in profit, because then it's the same sort of distance. I just don't want to be double distance away, that's all. So hope that makes sense. Hope that does make sense to you. So guys, yeah, that's today. I've got to be on my way. So I want to thank you guys for watching today. I hope you had fun, and I hope you have a wonderful trading week. We'll have another live session on Thursday. Thursday will be the USA session again. We'll have a bit of fun with that. And yeah. Seppo, hey, welcome, Marchana, welcome. Yeah. I'm glad to have you on board as well. Unfortunately, I'm closing the live session now, and you've just got here. But please join the channel, subscribe, watch all the videos, and come back for all the live sessions. Live sessions every Tuesday, Thursday, and just so that we can have a bit of a bounce off each other and a chat, and we can, you know, the top chat is amazing because we can actually have a nice little conversation, and we can ask questions, and we can get to the bottom of things and figure things out. But yeah, guys, I want to thank you for being here today. I think thanks for watching. Like I say, it is a holiday in South Africa. It's Heritage Day, so those of you that are South African, have a fantastic day. And it's a pleasure, guys. I hope you guys get something out of this. I hope you guys are learning from it and figuring things out. And I'm not too complicated because, you know, my whole thing is based on keeping it simple. So I really don't want to get complicated in any way. I will. There is another video tomorrow, obviously, and that'll be out normal time. For the members, they'll probably get it a bit earlier because it's a Wednesday video. Then we got the Thursday live, Friday video. Every week, I do a rundown on the markets as well on the weekend, guys. Try watching that. It also helps. It's normally out on the weekend. It's all about how the market went for the week and how it's going the following week. I see there's not a lot of that much interest in that video as I would have thought, but yeah, it's got views. There's a lot of people watching it, but yeah, maybe it's not as good as it should be. Okay, so guys, thanks for the day. Thanks for joining us, and I hope to see you guys on Thursday again, especially all the regulars here. So there's a lot of regulars. Simple, make sure you join us as well. I'm glad to have you on board, and I hope you've subscribed and you're part of the team. It's a community we're building here. We help each other, we talk to each other, and we try to become profitable traders. That's what it's all about.